Welcome to another edition of the Trading Bell. Today, we'll be focusing on some of the developments shaping headlines across the securities exchanges in Africa. And of course, we'll be taking a spotlight on the Nairobi Securities Exchange, where we'll be speaking to the man who sits at the corner office of the exchange, and that is Geoffrey Odundo, the Chief Executive Officer of NSE. But really, who is Geoffrey Odundo? Let's take a look at his profile. Geoffrey is an accomplished investment banker who has been in the financial services sector for the last 24 years, 17 of which have been in the capital markets in various senior roles. Mr. Odundo has advised on a number of corporate finance mandates in both the public and private sectors. He has also managed key mandates in the asset management industry. Join me for that conversation. Many thanks, Geoff, for joining us this afternoon.
My pleasure, Abby.
Well, it has been an interesting season, really. The banks are reporting their numbers. The NSE did report their numbers. But before we touch on the results, Geoffrey, talk to us about some of the regional trends that we are seeing coming up in the capital markets.
Yes, I think, Abby, that's a very good question and a good way to start. So 2018, we are witnessing a very interesting scenario, more like a recovery in our markets. The market today is about 3% up on the Nairobi 20 share index. We've seen volumes improve compared to the last 2 months of last year. And that just sort of gives us a feel that forecasting into the remainder of the year, barring any developments that we cannot foresee, the market should be able to perform pretty well compared to last year. What's driving the market? I think there's a lot of investor confidence back to the market post the political period. There's good prospects on the Kenyan economy, especially the infrastructure sector, the telecom sector, financial services and tourism, which have got companies listed on the exchange. And within the East Africa region, I think East Africa is a bright spot on the continent with the target growth rate in excess of 5% compared to the other regions on Africa, the African continent. So a lot of frontier investors are looking into Kenya as the leading market in the region, and hence this is what's driving volumes coming in.
All right. And Geoffrey, being one of the leading exchanges in East Africa, and the other day you did report some impressive results, indeed confirming that NSE is still a bright spot. Yeah. How did you manage to do this? 18% up in profits?
Yes. The 2017 was a very difficult year for the economy, as you might imagine, with the anxiety around the elections, the early effects of the drought, and the railing effects of the slow credit growth. All that impeded what we could call a normal year. And so for us, it was about the messaging, about the fact that the fundamentals of the market were strong, going out there, speaking to investors, attracting new pools of investors. I think last year we brought in a new trading participant from the Middle East, and that probably opened up another window. So providing that messaging that Kenya the Kenyan capital market is resilient to the turbulences that happen both globally and also within the country. And that saw the market pick up from the month of May even to the elections, and subsequent to the elections, we continue to do well. So those positive sentiments drove turnover. We saw an improvement in our equity turnover by around 22%. And also we saw a fairly stable performance on the bond market, which together contribute about 80% of our revenues. And then the other focus for us was to contain costs. So we only had a 3% growth in our costs, and that then helped us generate that profit. I must say that last year, despite the fact that the prices didn't perform very well, I think the investors sort of kept their position. So they took a long view on Kenya, and hence we could still see turnovers happen and they were still buying at those very low prices. As you may recall, Safaricom at that time, which is a large constituent of the market capitalization, was at about 11, 12 shillings in January, and towards the end of the year closed in the high 20s. And
now in the 30s.
And now in the 30s.
Yeah.
And so they, given the way they had the growth projections of that sector and the company, etc., they do take positions based on pure, very good research and fundamentals, and hence that saw a high level of interest, and that's what drove our performance. So I think it's a factor of increased revenues on our main income streams and cost containment. We reduced our cost income ratio to 66%, and very, very aggressively to ensure that given that we could not, that's probably the one metric we can manage, we had to really focus on that, and that's what drove our performance to the 18% that you saw.
I'm quite intrigued by the numbers, Jeff. Talk to me more about the cost containment strategy that you guys implemented. Right.
So if you look at our cost metrics today, a large proportion of our costs are our people costs and operating expenses. And operating expenses are pretty contracted, and these are the system costs. As you know, our core business is to provide a trading platform, and all these are contracted. So there's really nothing you can do about it. But what we did is work around our people costs. So we decided to really focus people on, especially our costs around training and travel and all these other expenses. We really managed to manage those well. We deliberately decided to optimize on our marketing strategy as opposed to doing own marketing. We did a lot of marketing in partnerships. We did a lot of training in partnerships. And that brought in a bit of more.
It did pay off.
Yeah, it did pay off for us during that period.
Yeah. And looking at this strong growth, Geoffrey, what will be defining your priorities now that you've been able to post some impressive numbers? What are you going to pigeonhole moving forward?
Yeah. So the focus for us in 2018 and into the next year, which is the end of our plan strategy, is to now and promote our existing products, our new the products that we've invested in. So the last 3 years, we focused around diversifying our product offering. So we predominantly have been a market offering only equities and bonds, but now we have a REITs platform, we have an ETF platform, and a platform for global deposit receipts, and very soon derivatives. So broadening those three into those new areas, we took a lot of investment in infrastructure, people, capacity, and a bit of public awareness. But now that we have them ready, it's about selling those to the issuers, potential issuers to come to the market. So our focus is now going to be a lot around marketing and promoting those products, enhancing public awareness, building stronger visibility for NSC at a global scale, and just making sure that we diversify our income streams further, as opposed to the concentration of 80% on what we call variable income. Try and move a lot more into what we call annuity income, the data business, things that we are sure we can control. Training for us is a business now, so we're going out there and training. We're looking at diversifying our investments within Kenya and also in the region. So if we get good opportunities to invest in other exchanges within the region, we will do that so that we can just build or broaden what the NSE has to offer.
All right. And Geoffrey, last time we spoke, you did hint to me that there's something coming up in regard to an application that will enable people to trade easily and trade from their phones, if I'm not wrong.
Yeah.
How far is this coming along?
So this year we are going to be launching our new trading platform. We are upgrading it to the current, the existing platform, but to the current vendor, but to a higher spec platform. And once that happens, we will be able to offer day trading opportunities where you can actually be able to trade on your phone. We'll be able to have a more efficient infrastructure that can offer quicker trades and settlements, and working together with our partners at the CDSE. And for us, the learnings that we got from Makiba will help us also think of how we can bring other products onto the platform, onto a national platform.
Yes.
So fairly soon we'll be launching a new product, NSE application, an app, and the app will basically provide information and knowledge and trading simulation for investors who want to learn how to trade in stocks. I think the second phase of that development will see if we can create an order routing platform within the app, but that will be informed by the level of interest we get in the first phase, which is basically just to provide an app that you can trade and see the market and receive corporate actions on a real-time basis. Yeah. So I think the journey will begin possibly by the second quarter.
All right. And of course, this is set to stimulate investor interest. I want to believe so.
Yes, it's about that.
And still linked to this, Geoffrey, of course, there is a cost to technology. Mm-hmm. How big a cost will this be?
We have actually invested all that. The last 3 years, we've had very heavy capital investments in technology. And so going forward, we don't see heavy capex in that area. We are basically just going to be improvements and maybe add-ons, but which is not heavy. So we have deliberately invested heavily. What we're looking at also and we're conscious about is the new technologies coming through, issues around blockchain and all these futuristic technologies. Now, possibly those are the ones that we're going to try and see how we can co-opt. But for now, I think we're pretty invested. We don't foresee further heavy outlay into capital expenditure in technology.
All right. I don't want us to go into blockchain because this will require another separate sit-down.
Certainly.
But as we wrap up the conversation, Geoffrey, we did see the WFE welcomed NSE as a full member. Mm-hmm. Just talk to us about this. What does it mean for the average Kenyan out there who should be keen to know more about this?
So the NSE was admitted as a full member of the WFE. This has been a journey of 4 years. What that means is we have actually attained the top standards of an international exchange globally. We have been an affiliate member for the last 4 years, so it's been a learning. But they then finally we had to go through what you call a candidacy process, which involved putting a case, sharing all our material, our standards, our surveillance processes, etc. So we had to go through a very deep process in terms of that attainment. So we did succeed this year, and we're now a full member, and we've received our admission. Now, what that means for us is that we'll be involved in the global conversations regarding exchanges. We'll be involved in receiving research from the WFE. We are going to be involved in the working groups in those markets for various products, which I think is going to be important for us, especially when we are trying to design products that appeal to the international market. So we'll be part and parcel of being in charge of that conversation and driving our interest for the frontier markets in that conversation. Now, what it also helps is that at a Pan-African level, we're now 6 members of the WFE organization. And that will then strengthen a case for Africa as well. And we will champion that as the NSC as well, to just promote Africa in the global space of the capital markets.
All right. Yeah. And Geoffrey, of course, a lot is in the pipeline as well. Mm-hmm. We do know that there's the Building African Financial Markets Seminar mm-hmm. coming up in the month of April. Perhaps, what should we expect? Personally, I'm very, very excited about this.
I must say that it's a milestone for Kenya to be hosting the Building African Financial Markets Conference. Now, this is a capacity building conference for the Association of Stock Exchanges of Africa. So Kenya, being the founder of that association, has now been given the opportunity to host this conference. And what it does, we're going to be bringing 28 member exchanges to come together and be able to network and understand and receive knowledge from international speakers on what's happening around investments and around capital markets and around technology. And so our theme for this particular conference is adaptive innovation as a lever to growth and sustainability of capital markets. Why are we taking technology? Kenya has become, I'll call Africa's Silicon Valley when it comes to certain forms of technology. Let's speak about mobile technology, which we have leadership.
Yes.
And so we believe that it's highly relevant today technology is disrupting everything, and so we want to be able to bring that knowledge and understanding and people to really listen to what's the future holding for our various markets. And so we've invited 28 exchanges and even other infrastructures and investment advisors and managers internationally.
Yes.
We've also invited our local investment society in, so you'll see our convergence of, it's going to be a very huge networking conference. We are bringing very, very eminent speakers in various areas. And I can say that it's going to be a real showstopper for our country, just as we are now getting into a high gear on building our economy, for us to be a showcase in Africa.
All right.
And at a global scale. So I really look forward to it and really how we can help promote this as we go towards that.
Well, we definitely wish you the very best.
Thank you very much.
As we look forward to this big event.
Certainly.
Thank you so much, Jeffrey.
Thank you, Abby.
We appreciate it.
Okay.
Well, as he said it, we definitely look forward to the BFM seminar coming up in April, and do make a date and participate in this particular seminar. Well, we want to bring it to a close on the interview segment for today and take you now to the other parts where we take a look at how the markets have been performing in our financial analysis. There's renewed